Hello and welcome to Corporate Trader. Not It's the Economy, because Bank Nifty has been such a flavor of the moment. And one bank that has been the market flavor actually for the past year is Bank of Maharashtra. The stock has seen a near 140% rise year on year. And that's due to quality performance. I mean, normally we don't associate such performance with public sector banks. It has the lowest cost to income ratio in the industry, 38%. CASA, that is a current and savings account, low cost deposits, 52%, which is by far the highest in the industry. The return on assets at 1.73 compares with quality private sector banks. And finally, today, of course, we have the big news that CNBC-TV18 broke, that the bank could be one of the many PSU banks who could be doing a QIP, probably 5,000 crore rupees. To give us more insights on the fundraising, but more importantly on the outlook of the bank, I'm joined by Nidhu Saxena, Managing Director and CEO of Bank of Maharashtra. Mr. Saxena, good morning and thank you very much for joining us. First, the breaking news, of course. We understand that there have been hectic meetings at the DFS and quite a few banks are going to raise QIPs. Are you going to tap the market?
So thank you, Latha, for that introduction for the bank. And coming straight to this question that you have flagged. So currently, if you ask me, our Government of India holding is around 86.46%. And yes, the bank has been consistently doing well. So for last 12 to 14 quarters, we have displayed a good growth on all parameters. We have had good efficiency ratios, profitability ratios, numbers are all favorable, the way the market would like to see. So yes, if you ask me, there is no urgent, emergent need on me to raise the capital for growth. But yes, I am currently maintaining a CRAR of around 17%. Going forward, I need to, my guidance is to maintain a CRAR of 16%. So that makes me raise money for my growth. So yes, that with that thing in mind, we have actually taken a board approval, and board has permitted us for this year for a capital raise. But what will be the deal size and what opportune time, and that as we go along the year, we will take a call at opportune time and do the capital raise.
You know, you've been making so much profit. You're adding to your net worth considerably. I think in a couple of years, your net worth will be like, what, 30,000 crore or something? I mean, it's a huge net worth. You don't really need the QIP, do you?
So, as I said, currently my capital adequacy is much above the regulatory prescribed level. But I need to, going forward, these are the good times. So we need to be mindful of, keeping those kind of high capital reserves with us. So if that is the level I plan to maintain for my growth, because if you look at currently my balance sheet size, so here onwards, after displaying, consistent 12 to 14 quarters performance, I feel that we should start becoming a bank of greater significance. Today, among the PSB space, also we rank at certain level. So maybe in this 1 year, one notch above, and next 2 to 3 years, 2 to 3 notches is what we broadly look at. So if I have to grow my top line, and yes, while I say that growing top line, we'll be mindful of the bottom line. So we'll grow with profit. We'll grow profitably. So if all that is there, I do need capital for growth as well.
Okay. Now, a point is taken. If you, this is an inflection point for the bank, if you, in addition, have capital. Now, the other thing I wanted to ask you about your profit, in spite of it being very good in the past year, it seems to me understated, because you've been providing hand over fist. You're what, 98% or something provided for, which is the highest provision coverage ratio in the industry. Now, what will you provide for? There's nothing left if you're 100% provided. So do you think there can be a quantum jump in profit in the current year? Because you will provide maybe, that 2,000 crore of provisions will be available to you.
Right. So yes, Latha, what you have observed is correct. My PCR today stands at 98.34. So with such a high PCR, the requirement for us to incremental provisioning requirement has really come down. So my credit cost is also reached 1% and we'll go below 1%. So this pressure on increased provisioning is not there. But all said and done, we do see some headwinds around the market towards the NIM if the rate cut happens and all that. So we are keeping a guidance for a stable, rather a high double digit growth in all parameters, and maintain a good yield in the loan portfolio, maintain our stress level also within limits. So
Okay.
with all broad things, we wish to take the bank forward.
Okay. No, no, I am coming to your loan growth and deposit growth. All of them are crying out for questions. But first, more importantly, I wanted to know if your credit cost still has headroom to fall. You're not 1%. My analyst Abhishek says that you're probably 91 basis points in credit cost. Is there room for it to fall further?
So maybe we can improve this number also and go up to between zero point 0.5 to 0.75,
Okay.
because the way PCR is already there, high PCR, I think that should not be a challenge. So we plan to do
Okay.
that.
Okay, credit costs will fall and you don't have to provide for PCR. Last year, you did 2,800 crores of extra provisioning. I'm assuming that can go to the bottom line this year. So, I mean, I'm adding all that into, what looks like a good year ahead. 52% CASA. Can you continue to maintain current and savings at that level?
So while that rightly pointed out, one of the enablers and the good points in the balance sheet is the high CASA percentage, the high CASA share. But see, I'm mindful the deposit is a very competitive area, and wherever we are having existing relationships, maybe even the state departments, the government departments across country that we are having, and we want to deepen the relationship. So we are trying to see that the vanilla operative account, beyond that, do we have their other relationships? Do I have their collection and payments collections businesses also? Whether
No,
I'm
no.
taking
1 minute, 1 minute, Mr. Saxena. We are already ending April, May, June quarter. You are in a good position to tell me whether your CASA will remain above 50 and whether your cost to income will remain at 38, 37%. Those two numbers can we take as given?
So absolutely, CASA, our guidance for this year, if you look at that number is we will maintain our CASA above 50. There is
Okay.
no big issue on that. We are working to see this stable number remain in the bank, and several initiatives we are taking. So
Okay.
initiatives around the products, which segments are currently not serviced properly. We will have segmented products to reach out to them, and as I said, the government and institutional relationships, how we can deepen further so that there's a stickiness that we build for ourselves through this CASA. So
Okay.
CASA guidance above 50, cost to income, the second part of your question, let me take that as well. So cost to income today is 37.5. And yes, you rightly pointed out we are lowest in the industry on that parameter as well. And the major enabling factor, two factors, in fact, the per employee business is highest for the public sector
Okay.
bank. So it's a 35 crore plus per employee business that we are having.
Okay.
Also, whatever incomes increase that is happening in the system with us, that is more than the
Okay.
OPEX that is
Sure.
going up.
Got
So
it.
these
Got
two
it.
factors. So, but I'm keeping a guidance because I'm going for expansion also. I'll be recruiting also. So 1,000 officers and other recruitments of specialized vertical officers we are planned, and
Okay.
that part of the exercise is already completed. So
Okay.
I'm keeping a guidance of less than 40 cost to income to be maintained.
Okay, okay. Good to hear. I have to squeeze in two quick questions because I'm running out of time. One, very quickly, you got nil tax because you were writing off past losses. This year, will you have to pay tax?
So that accumulated losses still
Loss.
allow me this current year. My estimate tells me that we may not be requiring. We still have
Okay,
a accumulated loss of more than 6,000, around 6,000 crores. So
okay. So you don't have to pay.
I
Okay.
don't have to. Even the next year, the following year, FY26, a little portion of that may be available to me.
Wow, this is some advantage. Okay, Mr. Saxena, very quickly, because you have so much resources in terms of retained profit and the potential capital raising, what kind of loan growth are you targeting? And quickly, another question, are you seeing worries in the rural lending? It's all over the place that there is stress because of inflation, late rains. So can we expect some stress in the book?
Okay. So my credit growth, if you see this year, has been 16%. And my within that, if I look at the retail has grown at 21%. And we have a RAM corporate ratio of 60/40. So we are going to maintain this guidance of 60/40. And going forward, we are looking at even corporate book to grow in specific sectors like renewable infra. We have LRDs, wherever the government PLI incentives are coming. So those sectors are our focus sectors for growth in the
Oh,
corporate. The RAM also is going to grow, and we should be maintaining a ratio of 60/40 for the remaining year. Within this, just to quickly add, we are picking up few segments like gold loan. It's a zero risk weight product, and I get a good yield with that. My portfolio has grown with a high YY growth of almost 50%. So
yeah.
around 2 years back, we were 5,000 crore. We are touching 10,000. We would like to see another 5,000 crore addition in the next one.
Yeah. And the stress part very quickly?
Yeah. So stress, yes, that is always we are mindful that what is the quality of underwriting that is happening and how the stress, if at all, is building in my loan book. If you see that my March 23 was 5 plus, it was 5.73, the stress part, which has come down March 24 to less than 5. We are 4.75. So stress is well managed, but within the segments, the two segments, yes, the agri segment that you pointed out, one, and even in the retail segment, what we have seen is the SMA zero part of it is quite high. So if my retail is 10%, within which SMA zero is almost 6%. So
Okay.
if, but that is more of a technical reason.
Got it.
Part 50% of that is home loans. I know they will not slip. So maybe there are some technical reasons around that. But yes, MSME and agri stress will continue to remain our concerns. But let me just quickly add with the last update, the monsoon predictions are quite favorable. If those things really are happening, I think we may see servicing of our agri portfolio also by borrowers quite well.
Okay. I'm sorry we are out of time, but you merit a half-hour show, Mr. Saxena. Thank you very much indeed for joining us. A bank well poised to take a huge leap. And of course, they have to be careful when the going is so good. On that note, curtains on Bazaar, Chartbusters coming up.